Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In today's session of Daily Stock, we are going to talk about the quarterly report for the second quarter of 2024 of the Home Depot, which is the largest home improvement retailer in the world. It has been able to clock the sales in the vicinity of US dollar 27 billion. On that top line, it has been able to generate the profit margin of around 10 percentage points. I'm talking about net profit margin here. That translates to the net income of approx US dollar 3.6 billion. So you would say any company which is making this sort of money, the net profit in the multiples of billions is going to be a big player in the industry, and that is true. And now on this level, it is always difficult to grow the business, and that is what we are witnessing for the Home Depot. It is also experiencing the high base effect because in the prior year particular lot of growth in those years, and now that is I think tapering off. There is steadying of these top line numbers. There is not that frenzy anymore, and which is translating into subdued growth, but the sales have been quite robust in absolute terms, though there is no increase. But I still feel the numbers of this kind, where the revenue is quite high, accompanied by healthy profit margin, is also healthy for the business. So in this context, we will see how things are shaping up for the Home Depot in the second quarter of 2024, using which we can then predict and anticipate the kind of quarter it is likely to see in the third quarter of this year. These are the numbers for the second quarter ended April 28, 2024. The net sales were at US dollar 36.4 billion, which is decline of 2.3% in comparison to the prior year's numbers, where it had clocked the sales of US dollar 37.25 billion. Out of that, it has been able to register a healthy profit margin, where the gross profit stood at US dollar 12.43 billion, which is down by 1 percentage point. You can see that there has been slight improvement in the way Home Depot is running its business. After factoring in other expenses, we have these operating income of US dollar 8. There was some issue with the internet connectivity. Now that we are back online, let us resume our analysis of the consolidated statement of earnings for the Home Depot. In the operating income, it registered decline of 8.5 percentage points, with its operating income now remaining just little above US dollar 5 billion mark. And if we go to the bottom line, there has been the net income of US dollar 3.6 billion, which is also in negative territory in growth figures, because in the prior year it was at US dollar 3.8 billion, that translating into 7 percentage point decline. So overall, on this high base of the last year, the Home Depot has not really been able to gain anything in terms of the sales or net income. There has been a steady decline, but I'm using this word steady in this context because of the high base effect. Otherwise, I feel that the business of the Home Depot is as solid as ever, and it is still in a unviable position to trade and invest from the long-term perspective. We will see how we can take advantage of this once we enter into the technical side of the story. For the time being, let us focus first on the fundamentals, which are looking quite solid. Let's see how company utilized its cash. From the operations, it generated US dollar 5.49 billion worth of cash, which is down from 5.6 billion a year back. For the operations, the main contributors were net earnings. Then there is also adjustments for the depreciation and amortization. And another big adjustment item is changes in the working capital. For the investment activity, there was outflow on account of capital expenditure, which resulted in this total net outflow of $830 million. For the financing activity, this time around, the cash outflow was lower, significantly, almost 33 percentage point lower than last year, as there was cash outflow of $4.1 billion. Out of that, there were dividend payments of $2.2 billion, and for the repurchase of the shares, 649 million were utilized. Repayment of the long-term debt also took place that took away $1.17 billion. And in this way, there was changes for the Home Depot's cash pile with the addition of 521 million. So its cash and cash equivalents at hand at the end of the period has gone up to $4.26 billion, which I feel is an adequate amount of cash which a company can utilize for any exigency, for any immediate requirement. It also has strong credit line, so it can avail the money from the financials, from the banks as well, if the need arises. So looking at these cash flow statements and the income statement, one can see that the Home Depot business remains strong. It is still bringing in a lot of money in terms of the revenues, in terms of the sales, and this is the outlook as well. We are not really likely to see any positive growth in this fiscal year, but the decline, that is the pace of decline in year-on-year terms, is likely to decline, and by the end of this year, the total net sales are expected to be lower by around 1 percentage point. Not much of an change, not a drastic decline either. Now, if we have to look for the trading and investment opportunity, we always have to consider the technical charting of that particular share. And here we are looking at the Home Depot's price action over last few days, last few weeks, because our outlook, the time horizon which we are considering this stock, is for all the three different time frames: the short term, the medium term, and the long term. First, we will see how things are shaping up in the short term, and afterwards, we will also consider the medium term and the long term outlook. In the pardon me, in the short run, it is having this price formation of higher highs and higher lows, which gives us the signal that it is better to go with the flow and keep looking for opportunities to go long, go and buy the shares or the futures, or maybe if you are dealing in the options, all options are going to be better bet. And that in mind, we have to mark key price levels which are going to be the important marker for us. And I feel the immediate swing low of 330 is going to be a important marker moving ahead, as long as there is this price formation with the immediate low being higher than the preceding low. We will have confidence of the continuity of bullish momentum, and using that strong momentum, we can go for a new long trade at the current price juncture, where there has been some buying support for the stock price of the Home Depot, which has rebounded from 350 to 360 over last two trading sessions. I feel watch watch out for this consolidation phase. If it doesn't really decline much below 330, which is the immediate swing low, then we are much more likely to see over next few weeks the stock rallying back towards immediate swing high of 370 or even beyond that. So if there is extended consolidation without dipping below 330 over coming few sessions, then as and when there is next part in the momentum for the Home Depot, we can go for a new long trade, new buy trade, and expect it to rebound towards 375, if not more. That's the outlook. Has tried to rally higher. If we look at the buying momentum, it pushed the stock price from around 340 to 370, and in this bullish momentum, we can try to make some gains, and all we have to do is pay attention to the price zone on which there has been support for the stock price, and that is clearly visible around this 330 340 price area. So unless there is any significant dip below this price zone, I would say that this is a decent support base which can be utilized as a clear cut marker for our trading decisions. So as long as the stock price remains above this consolidation phase low, we can be fairly confident on the continuity in the bullish momentum and try to take advantage of that by going for a buy and dip strategy as and when there is deep towards 340 330 price area. Even the price range between 340 to 350 can be kept in active consideration. If there is decline and then stability coming into play, we can indeed take advantage of these possibility of Home Depot again continuing to rise and moving towards 396 or even beyond that over coming few weeks, if not more. In the long term, the price momentum is equally bullish. It has seen its valuation skyrocket, and in the process, it has given solid gains for those investors who believed in the story of the Home Depot. Now, if you consider the price action for the most part of 2023, it was simply in a consolidation phase. It didn't really move much, and of late, it has found some support closer to the 300 price area and started to rally again. So I feel this is a good sign for us as traders and investors, and there is strong possibility of the Home Depot continuing to rally. As I said, its business remains strong, though there has been decline in the net sales and the net income. I still feel that this is purely because of the high base effect, and as things stabilize, we are likely to see growth coming back for the Home Depot's revenues in the next fiscal year. So, keeping that possibility in mind, we can always wait for the bullish momentum. And in this case, the price range around 250 to 300 is going to be crucial for the long term investors and traders. So, that is the price area to watch out for. That's it from my side for today's trading session of the daily stock, where we considered the price formation of the Home Depot along with its second quarter earnings report for the fiscal year 2024. Overall, the takeaway is that the business remains solid, the company is on a firm financial footing, and the stock price performance has also been bullish so far. All we need is a decent dip and consolidation, and then we are all set for ride towards the northern star of 420 and beyond. Now it's time for me to say goodbye for the day. If you have any query or any idea to share, do write to me in the feedback, and I will be more than happy to take the discussion forward. Thank you all for joining in. Have a fabulous time ahead. See you next time around.